Yes, now you can see me.
Yes, ma'am.
Okay, so today we'll study about ledger. Now, ledger is the second most important book of accounts where whatever accounts are journalized in the journal entry, that is a primary book of account. From seeing that, different accounts are maintained in a ledger and the required, say, entry is posted in the uh, the account which is related to it. So ledger comes from a Dutch word means legger. Legger means where something lies or where something is kept. So it's a ledger is a book where accounts are kept. Different account heads, say Mr. A, Mr. B, expenses, rent. So individually in that year, whatever payment or receipt has been done has to be written at one place in one particular account. So there may be a cash account or a cash book. Then there may be the different things bought and sold. So bought items will be in one place, sold items will be in one place. So it is a systematic way where all transactions related to a specific account are in detail recorded in a permanent order. Okay. So ledger means legger, which is something which is lying or which is kept. So all the different accounts, say liabilities, assets, current assets, capital, interest, expenses, in everything in detail, they are kept in a book which is called as a general ledger. So based on the requirement of the company and the scale of the company, the ledger, we may have different types of ledger also. There may be specific account ledgers or there may be one general ledger where everything is recorded. Depends on the scale of the business. And the main feature of ledger is it is an analytical record of transaction. Analytical means we are analyzing what account is debited, what account is credited, and we are also writing there a reference number from which date or which say page number of the journal it has been recorded. Then it is a secondary record. Why it is secondary record is because journal is the first book of accounts where any transaction big small is first recorded in a chronological manner in a journal. Now seeing that journal we make accounts. So it is journal is a reference and we are copying that details of entries in different accounts. That's the reason why ledger is called as a secondary book of account. And also it is a final book of entry because after that postings are not given anywhere. So you see it in the journal and finally or the second step itself is in the final account. So from seeing ledger we are not doing any other account. So we call it as a book of final entry. And it is the principal or king of book of accounts. Why king? Because in one everything in detail you get the balances of each type of an account, who has to pay how much or how much we have to pay to somebody, how much assets are there, what is their value, how much of loan is there at a particular period, at the end of the particular period. Then it is a permanent record of transactions. Then we have a term called as posting. Now what is posting? Posting is referring the journal and transferring the amount of credit and debit items in the different accounts which have been opened in a ledger. Okay, so when the procedure for posting is something like this. In the ledger, you have to enter the appropriate columns. Say a ledger is something like this. See here you can see. So this is a ledger. So here you can see that different accounts are maintained. Say there is insurance, cash, accounts. So there is some explanation, a reference number of the journal, debit, credit and balance. So any item is debit, we are going to write in the debit column. Anything credit is there, you are going to do it in a credit column. So we'll see that problem later. We'll come back to the procedure of posting. So what you do here is see the journal and the entry say is like say cash account debit to sales. So you have to go to open a cash account. On the debit side, you have to write to sales. Now something cash is coming, but why it is coming you have to write. You can't write in a cash book itself as to cash. Okay. So in the debit side, anything is debited, we start the word to. Anything is credited, we write by. So when you are posting in the cash book, we write to sales a particular amount, and you go to the sales book, and there you write on the credit side by cash. Okay. So this method of writing the debits and credits in the respective accounts is called as posting. There you write the date, you write to if it is debited, by if it is credited, then the amount, then the journal's page number, that is called as the journal folio, and thereby the posting is done. Here no narration is done. So we are using the words to and by. To is used with accounts that appear on the debit side. By is used with accounts that appear on the credit side. So the procedure of transferring the items of credit and debit from journal to the respective accounts in ledger is called as posting. Okay, so there are certain rules regarding posting. Now, what is the basic rule? You have to open separate accounts for separate type of heads. Say you have a customer name, say for example Mr. A. So A's account will be maintained, and here whatever transaction with Mr. A you have done, whether you are giving goods or you are giving money or receiving money, whatever it is, all related to that person will be in that account only. You are not going to write these transactions in Mr. B's account. Okay, so separate accounts should be opened for different types of, say, personal, real or nominal accounts. The concerned account which has been debited should be, so seeing the journal you are doing it. So in journal which account is debited, same account should be debited in the ledger also. You can't do vice versa. Okay, for a change चलो यहाँ पे debit है वहाँ पे credit करेंगे. No, that will not do. Whatever is debited in the journal, same account should be debited in the ledger. Similarly, whatever is credited in the journal, same account should be credited in the journal. Then we have a concept called as balancing of an account. Now, what is balancing of an account? A balancing of an account means at the end of, say, every month or every year, we want to know how much amount has to come from one person or how much amount we have to pay to one person. So this act of finding out the balance, say there are say 5 types of debit items, 6 types of credit items. So whichever the debit side or credit side, whichever is more, that is totaled, and the same total is written on the other side, and the difference is found out. So that will be the balance of that particular account. So for assets, we have debit balance. For liabilities, we have credit balance. So I can show you an example here. So they see there is a journal where it's written that, say that investor has started a business with a cash of 15,000. So what will be the journal entry? So cash is coming into the business. So you write cash account debit 15,000, and the investor is investing. You can write stock or capital account. So capital account. So that person is giving the money. So his account is credited. So 15,000 debit, 15,000 credit. So this is journalizing. Now seeing this journal, we are going to post in the ledger. So I have 2 accounts here. One is cash, one is stock or capital account. So whichever date is there, I am taking the date here. And on the debit side, I am going to write here to so in the cash account, I'm going to write on the debit side 15,000. For that, I'm giving the explanation to common stock or to capital. So how that money has come by seeing that to something, we can understand from where that money has come. So to common stock, 15,000 is debited. Then we open a stock account or capital account. Here, debit side, we have to write buy cash, means I have given cash to the business, and so credit side I'm going to write 15,000 buy cash. Okay, so we'll solve one problem for this. Yes, so there is one problem here. Okay, so here I think we have taken this problem in a last class for journalizing. We'll take the same problem. We have already done the journal entries. Now we'll post them in the ledger. Okay, so I'll just do a reminder about what was the problem. There is a student named Bob who has opened a laundry in his, say, university campus. He has invested 20,000 rupees. Then he has paid on 2nd September 1,000 rent, purchased some equipment, with some amount of cash and some amount of loan. Then he has also paid accident insurance policy. Then he has spent some money for advertisement in the local newspaper. Then he has given some amount of cash to his stockholders. And at the end, he has found out that over the month, he has made sales of services up to 6,200. Okay, so this is the journal entry we have done. So I'll do the recap. Say when you invest stock, what will be the entry? Cash account is debited, stock account is credited. Okay, so this, how will it appear? In cash account, see here on first I have written 20,000. Here the explanation will be, so there is some problem, you can't see what is written here. So here you have to write in the explanation to stock 20,000. Then open stock account. On the credit side, we are writing here buy cash 20,000. Okay. Then second entry. So he is paying rent 1,000 rupees and he is paying it in cash. So rent account is debited and cash account is credited. Why? Because rent is an expense, that account is debited. Cash is going out, so it is credited. So this entry will be here. Rent account here. So on 2nd September, to cash 1,000 is debited here, and in cash by rent 1,000 is credited in the credit column. Third one, purchase equipment partly by cash, that is 10,000 cash, and the remaining in terms of a small loan. So equipment is coming in, so its account is debited. Cash is going out and a loan is forming, liability is forming. So 15,000, that is also credited. So this account, how we are going to show? Equipment account is 25,000. Okay, so you have to write to cash and notes payable 25,000. Then in cash account 10,000 is going out, so you are writing buy equipment 10,000, which is credited, and in notes payable account again buy equipment 15,000 credited. Next is insurance is paid. So it is paid in cash. So we are going to, as it is an expense, debiting 1,200 for insurance and cash is going out. So 1,200 as credit. So this account will be here. So insurance account, where is it? Okay, insurance account is here. So insurance account is debited with 1,200 rupees and cash account is credited with 1,200 rupees. Next, advertisement expense. Again, this is an expense and here he is not paying cash, he is creating a loan. Means I will pay you later. It's an accounts payable. Okay, it's an outstanding expense. So expense account is debited and this is a loan. So that is credited. So in cash account, sorry, not cash account, advertisement account, here we are debiting 200 rupees, and accounts payable for this loan, small loan, that amount is credited in accounts payable account. Then profit is distributed to the stockholders or the owners. So dividends and cash. Okay, so dividend here is debited, cash is going out, it is 700. So dividend is an expense. I'm not taking the profit and I'm giving it to somebody else. So that is considered as a expense. So dividend account is debited and cash account is credited. So you have to open a dividend account. So here debit 700 as to cash, and in cash account credit 700 rupees by dividend. Then lastly, there is sales revenue or service revenue. So cash is coming in, it is debited. It is a revenue or income, it is credited. So you have to open a revenue account. Cash is coming in, so you write here to service revenue 6,200, which is debited here. And service revenue account, revenue is coming, so it is credited. So you write here by cash 6,200. Then at the end of the month, you have to total it and find out the balance. Say, for example, the cash balance with all the number of credits and debits, the cash balance is 13,200. How to do this? How many credits are there? Say 1 plus 10 plus 1200 plus 7. Okay, so credit is how much? 12,900. Debit is 20,000. So 20,000 minus 12,900, you will get 13,200. Okay, sorry. It is debit is 20 plus 6. So 26,200. Credit is 1, 10, 1200, 700. So this together it becomes 13,900. So 26,200 minus 13,900. The balance account at the end of the month of cash in hand is 13,300. So what you have to do? Debit the debit total, credit total, whichever is more from that minus the other total. So here debit total is more, so minus credit total, you get 13,300 balance. So this is called as balancing. For rest all things, here only we have one item, right? There is only
Ma'am,
one.
can you explain that again?
Which one?
Ma'am, this only bad, the calculation part.
Okay, calculation part. See, in cash account, we have two debits, 20,000 and 6,200. So total will become how much?
26.
26,200. Then credits, we have four items, 1, 10, 1200 and 700. So the total is 12,900, right? Yes, 10 plus 1 is 11, 12,900. Okay, so now 26,000 is more or 13,000 is more? So 12,000 is more.
26,000.
So 26 minus 12,900, you will get 13,300. So at the end of the month, you have to find out how much balance is there for every account. So in cash, we had many items. So we had to do this totaling of debit and credit and find out the balance. Now see, in other accounts, how many transactions are there? Only one transaction. It is either debit or either credit. So that itself will be the balance because no other transactions were there in that account. Say insurance, only once it was paid. Laundry equipment, once it was purchased. That loan, it was taken, nothing has been paid so far in this month. So if something has paid, again one more debit or credit would have been there. Okay, so for the remaining all accounts, there is only one transaction, either debit or credit. So that itself is the balance. So when you have only single item, you don't have to do this minus, plus, or say difference form. Jhamela is not there. Directly that. So the insurance is having 1200 as a balance because this was the only item here. For laundry equipment, the balance at the end of the month will be 25,000. So similarly for remaining. So either it is credit, if it is an expense, it is a debit balance. If it is a liability or an income, it is showing credit balance. Yes, have you understood this?
Yes, ma'am.
Yes, others?
Yes, ma'am.
Yes,
Okay.
ma'am.
So you have to
Yes,
solve
ma'am.
some problems, then only you'll understand what is it. Okay. So we'll do one more problem tomorrow on ledger so that you'll be confident about it. Yes, any doubts, please? So, so that will be the discussion for today. Yes, doubts are welcome.